Today, I'm going to tell you about the best way to understand if an investment is overhyped or overvalued. What's going on, everybody? My name is Maoli Vodi with Financially Present, and today we're going to talk about how to know if an investment is overhyped or just a bad deal. And we're going to talk about it in the form of the odd lot theory. And why is that important? So let's take a step back. When I was a stockbroker, we studied for the Series 7, the Series 63, and several other exams if you managed people or sold different products. And one of the theories that stuck with me the most was the odd lot theory. And that is because it helped me understand a little bit more about how these trades are passing through the system. So, way back before computers were as good as they were today, trades needed to be in a more manageable size, and they always had to be in round lots. One round lot represented 100 shares of a stock. This helped traders on the floor or market makers quickly pass information by knowing that, hey, every trade was always going to be about a fixed amount or more. So trades would start at 100 shares or 200 or 300 or 400, but that meant that these trades had to be large amounts and they had to be in a round lot. It would be as if you couldn't get change for $1. It had to be a specific fixed unit. So that meant any of the trades going through had to be large orders. So fast forward to today where technology is amazing and trades don't need to be in round lots. You can have trades as small as 1 share or 2 shares. It doesn't matter the number. Usually it needs to be a whole share in order to trade, all right? Not fractional shares. Those are generally more of a reinvestment. Fast forward to nowadays where shares can be or traded at any amount. So it could be 1 share, 2 share, 3 shares. It doesn't quite matter. It's generally just not fractional shares traded back and forth. It has to be a whole share, but it does not have to be a 100 share minimum. Now I'm going to explain a little bit more about the odd lot theory, but before I do that, I want you to hit that like button, the subscribe button, and also turn on notifications so you don't miss out on future content. So, round lots, they aren't just a thing of the past, okay? You have to think about how traders, whether they're professional traders or institutional investors, they all view information in the market in a similar way. They have to figure out what patterns give them the competitive advantage. So if they're used to always trading in round lots of 100 shares or more, when they see smaller trades come through, 1 share, 2 shares, and just odd numbers, that turns on a signal in their head saying, hey, those aren't round lots, those are odd lots that are coming through. And who are the people that place odd lot trades? It's generally smaller investors, people like you and myself, where you might trade a couple shares here and there. It could be anything between 1 and 99. Those are considered odd lots. Because round lots signify large orders, we consider that the big boy trades, okay? And in order for them to get a competitive advantage, they use all the information they can in order to make trades and get a competitive advantage. So when they see odd lot trades 1 share to 99 shares, that tells them that the little guys are in there. People like myself and yourself are placing trades, and now those big guys start to wonder, hey, is this something that everyone knows? Is this common knowledge now? If it seems like it's something that is no longer exclusive or special, that's where you see the professional traders and the institutions start to take a step back. They will assess the situation, and sometimes they'll stop trading in that particular investment because they know average people are in. And the idea and what patterns have shown is that when regular average investors who aren't as comfortable with the market jump in, the slightest bump may scare them out, and that can cause the stock to drop. Okay, so translation. If you're hearing about a penny stock or cryptocurrency in places that finances or investing normally aren't spoken of, then that means that everyone and their mom knows about the deal, and it may not be that good. Okay, and that's exactly how the professional traders and the big boys view it. Okay, so if everyone and their mom knows about the investment, odds are the odd lot theory is in place. And now the investment, you probably should use a little bit more caution before you decide to proceed and invest any money in it. If this video was helpful, I want you to hit that like button, hit the subscribe if you're new to the page, and turn on notifications so that you don't miss out on future content. Until then, stay present.